Hey traders, happy Monday. Chris Pulver here. It is August 12th and coming at you with a weekly outlook for the financial markets here, August 12th through the 16th. Risk off is still the flavor. Everything seems fragile out there. The U.S. market opening up this morning on a Monday, a little bit of softer news coming out of Asia, as well as everything in China looking a little bit gloomy. And of course, we have the lingering trade war. We have overall, just look at your currency pairs. Your risk off currency pairs are doing the best. So we're seeing Swiss franc staying stable and strong. We're seeing the JPY nice and strong. Let me go ahead and show you with the currency strength chart. Refresh this to real time and you will see we had some pound strength this morning. JPY up there with some volatility early in the session. This is around 6 a.m. Eastern time. We have our commodity pairs getting hit once again. This is the Aussie taking a backseat. Actually, last week on Thursday, Friday, the Aussie finished pretty firm, as did the New Zealand and the CAD. Now the Aussie's taking a back seat. So dollars still in the middle, but we have JPY still on top. And really alignment-wise, not much has changed. I think the market is waiting for some type of optimism or some reason to get a rally again. I believe from the sell-off we had since the Fed on the 31st of July, we've seen about a 6 to 7% correction in the overall markets. And we have seen an increase in volatility. So we're going to dive into the charts today, take a look overall at what's happening in the financial market, the setups in the currency world. So let's take a look at the economic calendar for this week. It's fairly light, but some notables here. We have pound employment news or average earnings coming out Tuesday during the London session. That'll strike around 4:30 a.m. Eastern time, which is a roughly 9:30 a.m. UK time. We have dollar CPI news Tuesday morning during the U.S. session. We have Aussie wage price index late at night. That's actually Wednesday's trading day. That'll be Wednesday's Asia session. Wednesday morning, we have pound CPI. Then again, this is just high impact news for the week. There's plenty more events between low impact and medium impact, but the high events, you can see there's a fairly light calendar, but still some notables here. Employment, CPI, wage price index, CPI for the pound, employment news out of the Aussie. So some decent short-term volatility there. Curious what the August 15th French and Italian bank holiday is. That is Assumption Day, all right? So everybody in Europe, happy Assumption Day. Retail sales out of the pound on Thursday and no high impact news on Friday. US has core retail sales on Thursday as well. So another, lighter calendar. Again, it's the 12th of August. Things are starting to transition. We've already seen a surprising amount of volatility to kick off August, but the market has stalled a little bit. So what do we need to pay attention to? Just like we talked about the last couple of weeks here, we're pressing towards some major levels. Now, I have been vocal about the weekly charts and the monthly charts and these major support resistance levels, and I really think that August, it serves two purposes. August is either a transition month where we see, what has been a trend starts to give bottoms and tops and reverses or corrects, or we see consolidation become breakouts. And because we've already experienced some breakouts in July, this is like literally the last day of July, July 31st through the first week of August, perhaps these breakout structures have already started. But then on the higher time frames, we're looking at major levels on monthly and weekly charts. We're talking about levels that haven't been touched in 10, 15 to 20 years. And if there's any significance to that, I would like to think that there's support or resistance to be utilized, to be traded. So again, pay attention when we're going through the charts today. Let's look at the bigger picture. Let's make sure we keep our lens and perspective accurate. So U.S. market to kick off Monday, everything is down and in the red. Futures market, let's take a look at the volatility. We have seen steady, 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 and then before, this is really during the European session, futures has been down all morning, and that's led to a softer U.S. Open, and I'll get to that in just a moment here. But take a look at gold. Again, gold on the rise to new highs. We'll take a look at the chart. Silver also creeping up towards 17, towards new highs. I, for one, have been long gold and silver since last year, so I'm certainly loving this. Oil stabilizing off the lows around $51. We're back up towards $55. Still in a wedge, but wondering what's the big play here on oil. So futures on the decline. Here's the Dow futures down, S&P futures down, NASDAQ futures down. You can see similar paths on all of those through the European session. We get into the U.S. Open, and everything has gapped lower. So top headline here, Dow off 200 as Hong Kong unrest further aggravates stock market worries about China. There is unrest and protests going on in China right now, disrupting markets, creating a lot of uncertainty. And again, after what happened July 31st and starting to see the risk off type sentiment, I really am taking the stock markets day by day and just making sure that I'm not catching a falling knife, making sure that I'm trying to stay with proper alignments and trading confirmation. I think that's really going to help moving forward. and give us opportunities to trade right now in the short term, as well as see if we have any major transitions, tops and bottoms, things like that, and reversals and corrections that we've been looking for according to technical levels. But for right now, it is wise to stay with what we see and stay with alignments. So let's get into the markets here. Let's start in alphabetical order. Aussie CAD. I'm going to go to a bigger time frame here and just work through my way alphabetically. Aussie CAD. I really still think we have some reasonable levels to the upside in Aussie CAD. Let's take a look here at the data feed. Give me 1 second. So here's what I like and don't like. What I like is that we are on the right side of this trend line, and we're still looking at a stochastic push to the upside. We also have divergence from these lows, where price is going lower and momentum has been disagreeing with that. Now, what I could see happening is this is a break of the trend line, come back and revisit the lows, or maybe a smidge lower, and then we have that transition back into a monthly pivot, which sits around 9,100, and there are a ton of levels to the upside. That's what I like about the Aussie CAD. What I don't like about the Aussie CAD is we are looking at a currency pair that just in recent weeks has started to break some major lows. This is roughly a 7 to 8 year low, if I'm not mistaken. We go back all the way to 2010. This low here held firm in 2013. So we're talking 6 year lows that has been breached to the downside. Now, in Aussie CAD fashion, I don't envision this pair just being a free fall to the downside. I do think that we will have some type of pullback. Now, whether that pullback is back to 91 and change before falling, or this is the low that becomes the reversal, I don't know yet. But I'm still looking for some type of correction and decide what I want to be. Now, I am currently holding some short-term buy positions and looking for 9,100 and 9,150. If that level's hit, I will most likely protect some profit. I'm looking for either a rejection off of this becoming resistance and selling again, and we can get back into the trend, or this is going to be a full-on reversal and this thing stays in a range for the last 6 or 7 years, and this is nothing more than a steeper fake out. All right, but I do think that we will get to the upside. Now take a look at this stochastic on the weekly chart. This is also showing that it's oversold because this goes all the way back to early parts of 2019. So if that cycle has anything to do with this, then we would think that this would translate into a buy opportunity, at least in the short term. Aussie Swiss. Now, the Swiss has been pretty firm because of risk off. The Aussie has some up and down days based on commodity pairs getting hit with some hard volatility. Aussie Swiss, I still like where it is sitting based on the higher time frame. Here we are with a horizontal level right there. That would go, let me go ahead and change that to black. Okay, so this is Aussie Swiss at, here's the weekly chart, the lowest low we've ever seen since 2001. So that low in 2015 was just around the corner from the Swiss National Bank flash crash. That was January 2015. We tested the lows and just exceeded those lows in September, only to create a strong reversal. That low actually, I think that was in August because that was the same low that established on oil. We had a bottom in oil, we had tops on commodity pairs, bottoms on commodity pairs. It also happened to be in August, which, as I said, is an important transitional month. So on the higher time frame, does the Aussie Swiss have room to go lower? Possibly. Do we have, how many daily chart or how many daily candles do we have to the downside? Quite a few. Now, again, big sell-off here. Are we pausing? If you're in this in the short term, you're still looking for the pressure to stay to the downside. If you want to buy low, it's probably best to look for some confirmation to buy or look for a trendline break before we start looking to level into this. Now, personally, I have some positions already running on the Aussie Swiss, and I'm looking for pairs like Euro Swiss, Dollar Swiss, Pound Swiss even, to show some Swiss franc weakness, and I think this would also benefit a pair like the Aussie Swiss as well. So what I'm doing right now is just kind of holding some small positions. I am looking to see if we get a trendline break, and then I'll look to buy more. If it does go a little bit lower, I will just be patient to see how the structure sets up. This could also be setting in divergent lows like a wedge. We still have a cycle to the upside, which hopefully allows this to rally up on a correctional move. I would love to get this back towards minimum 6,800, but I have my sights set on 7,000 or higher. So if I can hold this one, at least in the medium term, this should be a pretty nice payout. Aussie yen, we're currently at 71.11. That is just off the flash crash lows that I will go ahead and mark right now. Flash crash lows there from January of 2019. That was just after New Year's. And what do we have? So we are looking to see, now we have a pending buy with my flex trading room at 70.80, and it's a really straightforward trade. If we get filled at 70.80, we're going to give this about 1 day. If this goes and fills us 70.80 and then we get stopped out the next day, that is fine. It's either a trade that works with a rejection and we go our way very quickly, or it is a trade that doesn't get filled, or it's a trade that we end up stopping out of. So we'll keep an eye on this one this week, and especially with the flash crash low from January, if that's all the market is trying to do is come in and test this low, and that's a reversal point, that would be excellent, and we can hopefully get filled off the lows and see price go our way very quickly for some pips to the upside with very little risk. Of course, if it does go against us, and let's say it closes the day beyond this flash crash low, then we will close out of the trade and maybe lose 30 to 40 pips. Aussie, New Zealand. This one has pulled back a little bit towards the RBNZ news from last week. Take a look at this one on the channel. I'm still long and remain long on this pair, and I am really just looking to add additional trades or just be patient. This was a nice turn from last week. If we have a pullback, I'm looking for higher highs and higher lows. That's really all there is to it. If it comes back in and wants to retest the news, that is fine. I'm still looking for bullishness towards at least the highs at 107.25, ideally 108 or higher on the Aussie New Zealand. Aussie dollar, 6750. We're back in towards previous lows, which I would keep a close eye on that. This was the flash crash low from January. We tested that low. You can see that nice indecision candle. Now, what is price action doing right now? Let's go to the 4-hour chart here in just a moment, but look at the daily. We had so many consecutive daily candles, a nice little morning star, and if all this is doing right now is testing the wick, if this is your little trend line break, if it's testing the lows or trying to test the low of the morning star, and then we recover, I would still look bullish on the right side of the trend line, but I wouldn't jump into this trade without some confirmation. So using a system like the amplifier, make sure you see bullish confirmation. Looking at the sentiment strength line, or looking at momentum, make sure you see some green lines. If you're using Right Trader, make sure it's in a buy zone on a smaller time frame. If you're in six-figure max, make sure it's in a buy zone. So all your respective systems look for a sign to buy. So if we have a trend line break, that works. If we have dynamic support with a stop area below this low or below an indicator low, that's fine. But I would look for something like this in the short term. Can we break that trend line without giving us too much grief? And that way, if it does not break the trend line, then we don't just sit here and guess. If it breaks the trend line, we can put a stop below the U-turn, we can put a stop below the swing, and we can see if it makes a new high. This would be a simple correction to the upside and perhaps more of a reversal, at least coming in the short term. But we have to get some movement to the right side. We have to get some confirmation by those bulls. CAD Swiss. I was really surprised with this one last week. Why? Because I expected I either have a winner on Aussie CAD or CAD Swiss. Turns out both of them somehow are losing. So that just shows you how correlated and quirky the markets are right now. The CAD Swiss is heading lower. The Aussie CAD is heading lower. Why is that? Well, because we have the Aussie that's weaker than the CAD and the Swiss that is stronger than both of them. So that's how they're both losing at this time, just in small positions. But still, I like the larger term, the longer term on the CAD Swiss. In fact, I'm just going to wait and patiently buy it off of this low after having a position filled at 7370. So this is entry 1, that's very small. If it comes down into this area for entry 2, that's going to be trade 1, trade 2. If we get a nice bounce, I'll play the range back up towards 7600. So I still want to stay long on the CAD Swiss. There's also a massive channel. If I zoom out, you can take a look. See if I can get this to hold. There we go. So take a look at this chart, and we just see a big channel, right? See the lows, see the lows. We could come down to that same level and form some massive support. So I think if we hold the structure here, CAD Swiss should be a good trade to the upside. Around 7100 be the lows and 7600 be the highs. So I'm looking to buy low and build some small positions off of those lows. CAD Yen broke below the 80 barrier. We still have the flash crash low from January that it does seem to be wanting to test. Again, stay with your alignments on this one. You can see some noise around previous lows, but this is a legitimate level around 7750, and the path of least resistance right now with risk off is to the downside. So unless you have confirmation to buy, don't buy it. This would be look for bear flags, look for systems to give you resistance, look for reasons to sell the rally, have stop losses if you're trying to sell this, because this is in a trend to the downside. And in a trend, we should see lower highs and lower lows. So we're looking for trend line breaks, we're looking for resistance, we're looking for rallies that we can sell with stops above those highs. And if we have this pushing down, we have another roughly 200 pips to the downside on the CAD yen. Swiss yen has been back and forth because you have safe haven versus safe haven. So I would say this one we want to just stay out of. We've seen a lot of volatility here recently. I would say this one is not good to trade at the moment. Euro Aussie. We had we had a wild run on the Euro Aussie. This thing nearly ran 1,000 pips from 5,900 to 6,800. That is a crazy move in a very short amount of time. Now, if we take a look at this 4-hour chart, what I am watching for is we are breaking this trend line. Now, I am curious, does this break, retest the high, and then fall? Or does this break the trend line, retest, make a lower high, and then start to fall? I am looking for right side of the trend line confirmation to sell more, which would be over in this area. I would have to look to sell more here. That'd be my best confirmation. For now, I'd say if you're looking for a sell opportunity, sell this one nice and high with a stop area above. That way we're looking at very little risk for a lot of downside. If this does cooperate with a overbought zone, or we're looking for a stochastic to go back down, if we fail to take out this high and this is resistance, this is a great spot to sell, stop loss nice and tight. Even if it works its way back to previous lows or lower, we want to stay in this trade to the downside with our risk just above that. So I would look to sell the Euro Aussie, but we do need to see some confirmation or rejection. If you're scalping, you can trade just the alignments you see on the shorter time frame, which is this has been in an uptrend. This is a little baby pullback. We might go up and hit those highs or go slightly higher before we pull back. All right, so trade the alignments, but like I said, right now my goal is to try to get a trade nice and high. Right up there, stop area nice and tight. If we get a rejection, come back down to equal lows. If we break this trend line, I'm looking to see if we have a decent reversal here on the Euro Aussie. That would also help the Aussie Swiss go to the upside. Euro Canadian dollar. We took some profit on this one last week, and it was decent, right? We waited patiently, very patiently. We had to wait like 19 or 20 days to get our profit out of this one, but we had runs to 48, 48.50. In fact, we went all the way up just shy of 1.50. So even though this was a high volatility movement, you can see that it respected the structure that we had in the market. Previous low, previous low, previous low. That rejection was spot on. Now, I do think that for right now, this is probably going to consolidate a bit more, and we'll figure out what the next move is. This could either continue to go up, or this could be further to the downside. I'm not quite sure, and I'll stay out of this one for now until I have something more clear. But for the trade that we did take, we were leveling in this area. We took a nice little run towards 4,800 and 4,850 and grabbed some profit. Euro Swiss, holding this one more for the medium term. We're at 108.76 currently, and we have two levels that we're watching. One is a channel. You can see this one pretty clearly. There's a nice downward channel right here. And if we're going to start building some support off these lows, I would expect a short-term move to channel highs. What I'd really like to see is if we can get out of this channel, there should be some momentum to the upside to recover back towards 1250 and 1300, as well as previous highs way up here around 1460. But in order for this bullish move to happen, we have to start making our way to the outer channel and start getting on the right-hand side of this first. So that will require more than likely a lot of Swiss franc weakness, which can happen literally at any time. That is a lot of intervention and manipulation that tends to come from the Swiss National Bank. I'm not depending on that, but for this move to get some traction and some trends to the upside, we'll probably have to have some type of intervention there. Euro pound. We are roughly 20 to 30 pips off the highs. Again, we pushed even higher last week. I'm going to compress this chart. We might see just this trade continue to be irrational. This is 14 weeks in a row. I think this is going to be 15 in a row. Weekly candles, by the way, which is unbelievable. But take a look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. This is the 15th week. So if we finish bullish again, that's 15 weeks in a row. Now, it would make sense that seems a little uncharacteristic of any currency pair, that this would be some type of indecision candle, perhaps something bearish, and we have some type of correction coming back into 89.50, 8900 area. Correction is warranted. Correction is very likely overdue, but respect the levels. If it comes back to this area, this might be a safe spot to exit before it bounces. If it comes back any deeper, make sure you're doing whatever you can to protect some profit. If you're looking for a sell trade, you have to go down to a smaller time frame. I'll look for some stop areas above the highs. So this trend line, for example, that we were looking at last week in my trading room has not quite given us the break. So we are testing those lows, but not really firmly breaking those lows. So if we see price getting more bearish, that looks fine. Then we can look at adding trades. Again, safe level to exit is going to be right around 90.30 or 90.39. If we come all the way back down towards 8,900, I'm going to get out of this trade. I'm currently holding some sell positions with a break even around 8,900. If I get towards break even or I get one more trade added in, I think I would be fine just getting into net profit or break even on this trade for now. But if it gives us, reason to stay in it longer, then fine, we'll stay in it longer. But for right now, I think a break even is a safe play and a smart play. Euro yen. We are still below 120. Let's look at this one on the daily chart. I believe this is sitting right around the flash crash low from January. It is right there and pausing right there. Now, can this go lower? Yes, it can. Take a look at this channel. Channel support, channel support. Could it go lower towards 116? Absolutely. We did fill the French election gap back in 2017 right here. Finally filled that with this recent move from the end of July. If we get to 116, watch for that to be a bounce. Right now, the pressure is on. Stay with the bears, stay with the alignments. Unless we see a massive V-bottom or a big uptick in the stock market to drive these JPYs into weakness, the alignments are just, again, everything is bearish for right now on pretty much every yen pair. Euro New Zealand. 7371. The RBNZ rate decision, they did cut rates by 0.5% actually. It was 50 basis points. And where did that leave us? Well, longer term, we still have an opportunity to look for a sell trade off of this swing, but we need to break this trend line. For the sellers on the Euro New Zealand, we need not take out this high. So that's where stop areas are going to sit. If this is a move back in, coming to retest, if we don't take out that high, then we look for sell trades. But it looks a lot better as a seller on the right side of this trend line. Again, look at the velocity here. Crazy move to the upside in a very short amount of time. In fact, this did go 1,000 pips straight up. Crazy, right? That's how much volatility we saw in a very short amount of time. But what do we have right now? If this high holds, then look for this to get on the right side of the trend line and start going lower. But the stop area is going to be above that news high around 7,600. Euro dollar, we're at 12.17. Still a lot of indecision on the euro dollar. I still remain long in this pair, holding from 13.20, which is up a little bit higher, and another one around 11.70. Let me check my levels here. Let me just get in my charts. I know we have 3 small entries on the euro dollar, and I believe we're in profit. So let me double check. There we go. So we have entry 1, entry 2, and entry 3. So entry 3 was awesome. We are in profit. Entry 2 was in profit. Entry 1 is at a small loss. So we are sitting, essentially we're sitting in profit by a small amount. But as long as this continues to stay sideways, hopefully we see another move to the upside with a weaker dollar index. And we should be still looking for a move to the upside towards 1,700. Now, this might not be the fastest move. This might be low and slow. But as long as price doesn't make some massive, push back lower, and honestly, even if it does, this level is probably just building off lows. We've seen it happen before. This little corrective move to the downside did hit symmetry. If we stay on the right-hand side of this trend line, this is just a massive wedge. This falling wedge should ultimately lead to a squeeze to the upside. It might not be the easiest because it is a negative swap. It is negative carry. But if we have an increase in volatility, the dollar should weaken, and technically this should get back to 1,700. So that's what I'm looking for. It is going to take a weaker dollar to do that. I'm still watching the dollar index very closely to see what we have day to day. Pound crosses, pound Aussie. Pound Aussie has been choppy, to say the least. Once we had some pound trends in April and May, we've had some volatility coming on the pound crosses with Boris Johnson and Prime Minister and more Brexit drama. But look what's happening here. Lots of short-term activity. For my recommendations for pound crosses right now is either trade long-term with big levels and super small trade sizes or scalp it. There are lots of strategies for scalping. You can trade with micro price detectors. You can trade the London daybreak strategy. You can trade, just intraday during the London session looking for some activity on a smaller time frame. But it is day to day. I would not want to be, heavily trading big sizes or big money on pound crosses because, they are so sensitive right now to anything that is Brexit. We have the pound yen that is down. We have the pound Swiss that is down. Why? Because of risk off trading. But we have the pound Aussie that is sideways because both are weaker. We have the pound New Zealand that is sideways because both are weaker. We have the pound dollar even that is hanging out around 1.21 with that very important psychological level at 2,000. So just keep that in mind with the pound crosses is you're seeing volatility, which is a good thing, but be careful how we're trading it. Short-term trading can be difficult. It can be tricky. Have a good strategy. Micro price detector is a really clean way to eliminate some noise during the day. London daybreak strategy is a very black and white. Set it and forget it. It either works or it doesn't. But if we have an opportunity to make 50 pips, 100 pips, it can be done with today's volatility. We're looking at higher daily trading range, that's for sure. Daily trading range is up over 100 pips, at least for the last 4 weeks, and that's a good thing because if we have lows to highs, we can get filled and grab 30, 40, 50 pips, set a stop loss, and let it run. See if we get lucky on a daily trading range. But pound Aussie sideways for right now. I don't have a clear direction, but there is volatility. Pound CAD, we are just below 6,000. Holding. Now this one is a trade that I'm currently in with some buy positions. I am looking to get myself out around 6,600. Now again, have we broken the trend line? Have I gotten in too early? Yes. But if we start stabilizing here or start showing some signs of a falling wedge, that would be a nice upward move towards 65 or 66. If we see weaker oil, this will also make a nice move to the upside. So let me go ahead and get rid of that. So I'm still holding nice and small on the pound CAD. It would certainly look better if I get on the right side of the trend line, but hopefully 6,000 holds nice and firm. Pound Swiss, we're at 1,700. This one is sitting near, I believe, close to 20-year lows. Very close to it. We have a low back in 2016. That is the October low in 2016. That was from Brexit. That was a Brexit flash crash, actually. So that is right here. We are sitting right at those lows, actually just lower from last week. If you look further left, this is the lowest it's ever been. Way over here back in 2011. So that, again, was another level of Swiss National Bank intervention. That's around 1,400. Could it drop lower? I suppose. I'm looking at crazy alignments on the weekly chart, straight down move on the weekly chart. I'm looking at tons of risk off. If you're trading it right now and you want to go with the alignments, it is bearish. But you are selling at these lows. It is, again, if you're trading short term, you can still scalp, you can still grab some pips. But it's really difficult to mentally commit to selling historical lows. That's the same as buying in historical highs. If I was a trader, which I am, and I'm looking at probabilities, I would like to think that 20-year lows have some significance for some type of correction. Now, we don't have any evidence of that correction right now, so that's where the patience comes in. We need to see sentiment strength line U-turns. We need to see trend line breaks. We need to see buy signals coming from our respective indicators. Right now, I've been staring at this right trader chart, which still shows a crazy long bar count. In fact, we are over 400 bars on this right trader chart, which I don't remember the last time I've seen 400 bars on a 4-hour chart. And granted, we are in some unique territory with pound and Brexit and trends and risk off, so that's why we're getting such the extreme. But at the same time, these numbers don't lie. These historical significance and probabilities don't lie. How's it going to shake out? It's probably not going to be pretty. It might be a move into that 1,500 zone before we get a big reversal. It might be something out of the news. We don't know yet. But I'm still holding small positions on this pair. Would I like to be exposed on pound crosses? Not really, but I am. I'm in Euro pound, I'm a pound Swiss, and a couple others. So I'm trading them super small. Like I said, my options for pound trading is either long-term position with small trade sizes, or it is short-term scalping, and it's trying to make some pips every day. All right, because they are delivering on volatility, or they're sitting at major levels compared to 2016, compared to historical lows, which to me are all very significant because that's how I plan my trades. Pound yen, we're at 127. This one is in channel lows. It's actually lower than that if I'm not mistaken, right there. So flash crash from January, channel lows. Look left on your chart. What do we have? In fact, this pair has only been lower back in 2011 with a low back here in 2009, slightly after the financial crisis. So have we seen much more to go to the downside? We could get to 118. We could get to 118, 119. We could have 120 as a round number. So again, stay with your alignments. But if recent history has anything to do with this, there was a significant bottom there. Could we do the same thing over in this area and form a low? If so, that turns bullish. If so, we look for indecision. If so, we look for something bullish and confirmed. We can have a tight stop. We can hold this thing for as long as this wants to recover. But we need to see the evidence first. So I stand and repeat the same message. If you want to trade the pound, short term, trade it intraday. Okay, scalp it, look for flags, look for structure, trade the 5-minute, the 15 and 30-minute, use the posture of a 1-hour chart, stay in the direction of those 1-hour charts, and then go down to your smaller time frames for precision. Use your micro price detector, use your right trader scalping, use your London daybreak strategy, things like that. Those are all effective when it comes to trading intraday in the pound. Pound New Zealand, 87, what is it, 8780. Let's take a look at the structure on this one. Let's go to the daily chart. This one looks an awfully lot like the pound Aussie, which is volatile at this time. Daily trading range has increased recently. I would still like to see, if I have a decent direction here, I'd like to see more selling on the pound New Zealand. But we've had a lot of volatility from last week's news. So again, can we get a nice little setup to sell it? Can we get something on the right-hand side of the trend line to sell it? Can we get a double top here with the news to sell it? I would like, all the above on the right side of the trend line to set this trade up going back down towards 8,200. Pound dollar, psychological number at 1.20. And also a major wedge. Support, support, support. Is it support? 1.20. Is this a transitional month? Will we see an indecision move? Will we see a V bottom? Will we see a recovery from 1.20? I hope so. Technically speaking, you would think that we can find it, right? If you're waiting for a bottom, wait for confirmation. If you're waiting for a bottom, wait for the right side of the trend line to happen. Then we have a bottom, right? But right now it is, pressure is on. The path of least resistance is to the downside. Although there are banks and major funds that are taking these trades and having to fill those positions, they can sit and sit and sit and hold and hold and hold, and they can offload them later, where retail traders don't have that luxury sometimes. So anyway, if it holds around 1.20, that's a massive psychological number. I just read a report last week that Goldman is not predicting, but they're saying that parity is possible. But that same type of narrative also came with the euro. When the euro was dropping from 120 to 110, 110 to 105, everybody was saying parity, parity, parity. It found 105, it found 105, it found 105, and then went to 125. So although I would say, sure, it's a possibility, so was 130, so was 140, so was a pound recovery. Now it seems like right now the pound has been beaten so badly that, of course, all traders jump on board and try to, get on the pound train to 1.00. But if this technical pattern has anything to say about it, this is support, this is support, this is psychological support. If we can get out of this towards 127, that's just a technical recovery. We have not had much of a wave pattern since this pullback around to 128. So that's what I'd be looking for as far as 2,000 holding. If we do that, then we'll probably have a short-term recovery on all pound pairs. But until that confirmation happens, again, stay with your short-term alignments on the pound. New Zealand CAD, pretty much a pause going on right here. I still want to try to sell this one. I just can't get a good entry. I had a pending sell right here at this resistance. It came right up within about 20 pips and didn't fill, but did go all the way down like we expected. So what am I looking for? Well, if we make a short-term recovery, I'm still looking for sell opportunities on the New Zealand CAD. New Zealand Swiss. This one is a lot like the Euro New Zealand. Have we come down to a decent level of support? Look at all these daily candles in a row. That is a lot to the downside. Look at the channel. We have structure to the downside that should show some support. Support. Is this going to be another level of support? Can we come up and have a channel? Right? Do we have support resistance? This is nothing more than a channel. Let me go ahead and just add that. So if I take a trend line and connect, let me just make this parallel for a second. I'll make this parallel and connect right here. I mean, that seems to do a pretty good job of connecting the highs, the highs, the highs. And if this is a channel, well, we have major lows that I'd be watching for. We have this low that just got broken, but if this is going to bounce, I would look to see if it bounces. I'd like to see if the Swiss allows a weaker currency pair. The Euro Swiss recovers, the Pound Swiss recovers, the Aussie Swiss, the New Zealand Swiss, the CAD Swiss, the Dollar Swiss. The Swiss Yen would go down, actually. Okay, so watching the Swiss franc pairs, and for a pair like this, even at 1% with the RBNZ cutting rates, I'd still hold it for positive rollover. So anyway, I am holding Aussie Swiss long. I'm holding New Zealand Swiss long. And just by the nature of these currency pairs, I tend to want to hang on to them in favor of buying them over selling them. So I do have some positions already in. You can see a couple trades here at 67.40. This is actually 64.69 and 63.34. And that was after taking some profit up here in this yellow zone. We're about 300 pips. And we kept this trade. I'm just waiting. We could look at a simple trend line break here, nice and aggressive. See if it bottoms out, starts to recover, get us back in a profit, and all is well back up towards channel highs. So keep an eye on that. New Zealand Swiss, New Zealand yen. Right now it still remains bearish, as with all the other yen pairs, but look left. And this is why I'm talking about all these major levels. Look at lots of resistance here, lots of support here. If this level is being breached, look at where we are. This would be resistance becoming support. All it takes is one massive indecision candle. If we have one big break to the upside or something either bullish engulfing or indecision that becomes bullish, then this entire downward move for the last 2 to 3 weeks is over, and this becomes the transitional bottom. But we can't deny that this is a major low that's being broken, which is this was resistance, became support, this was support, this is now a break. So are we going to stay in this channel to the downside? Are we going to drop faster to the downside, where we come all the way back into another 1,000 pips of movement? This gets us back into 60, which is 800 pips lower. So depending on the volatility here, this could move a lot lower. But there's two ways to play this. One is we're breaking, look for a pullback, and you sell it with a stop loss above. The other is wait for the channel to see if it bounces from channel low to channel high. If we have that, we probably have a either correction coming or more channeling happening. But if we see a move back to channel highs, we're likely going to see all JPY pairs get weaker. All right. So, I mean, this could be a massive drop towards 6,000, which means all yen pairs are looking for fresh lows and aggressive fresh lows. But that means that the stock market is going to be talking about, you know, the worst type of decline since 2008, 2009. That's how bad it would get. Okay, for this to happen, you're coming off of 2008, 2009 pressure. That's how fast this would be dropping to get down towards 60, along with other pairs as well. But it kind of feels like a day by day, which is annoying because you're not really seeing consistent volatility. But at the same time, we have to take it day by day. New Zealand dollar, 64.56. I think this is more sideways for right now. Not really clear on direction at this time. So we could probably just stay out of this one for now. I would watch this low around 6,200 on the New Zealand dollar. Otherwise, is this going to be weaker dollar? Is this setting up for some type of wedge? I'm not sure, but watch this structure closely. Maybe a bounce there coming on the New Zealand dollar if we have dollar weakness. Dollar CAD took some nice profit on this one with a rally up towards 3,200 and 3,250, and it even hit 3,300, which was our target here in this yellow zone. This was all corrective to the upside, and boom, hit our target. Now, I'm looking for evidence to sell this, but I need oil to give us clarity. I need the dollar to give us clarity. Until it does, I'm not going to trade the dollar CAD with much action. So we'll get to oil in a second. We'll get to the dollar index. I'll show you why I'm slightly indecisive on this one. Dollar Swiss, we're at 9693. This one continues to drop a little bit lower. I do have some buy levels in at 95.50 and 92.50 on the dollar Swiss. Those are medium-term levels to hold and buy, with big levels way up here to get back and find. So I would consider holding dollar Swiss long, but it's got to be at bargain levels. It's got to be at, you know, major support levels with a larger range in mind. Dollar yen, we're at 105.37. I am watching dollar yen closely. 10500 is super important. We had levels. Here's 105 right here. There's 105. There's 105. What are we doing right now? We are dropping back into 105. Is there a reason that we would drop into that level and offer a bottom to bounce? It's very possible. So I will be looking for a chance to buy this just below 105 or at 105. Stop area maybe a day or a week tops. How long do you want to hold on to the trade? If it breaks right through 105 and you're filled, maybe wait one day, because if the next day is indecision and the next day is bullish, it's worth hanging on to the trade. But if it's you're filled and the next day is bearish, it might not be worth hanging on to it. All right. So all I'm doing is looking for a bargain. If I can buy this low, my stop area is pretty tight. And if it gets a bounce, then we should be in profit to eliminate risk and grab a few pips. Hopefully a lot. Because if we have anything to do with this low to this rally, this low to this rally, this low to this rally. I mean, even if we range, 105 goes to 112, 105 goes to 110, 105 goes all the way up potentially to 114. But we need to see some major cycle change here on the dollar yen. Dollar peso, this one actually did what we wanted it to do. I'm waiting for another opportunity to set up the peso. This was a, sit on the trade. We made money off the bullish movement towards this yellow box. I didn't hold it very long. I actually closed out prematurely before all the news happened in the end of July. I ended up making only a couple hundred pips on this trade overall. But I'm still looking to see, is this an opportunity to sell, or is this going to go back up for another rally? Then we sell higher. Not sure yet. Cross the peso off for now. Dollar krone is 91. Leave that one alone. Dollar index, let's spend some time on the dollar index. We're at 12,388. So this was our little top put in just after the Fed on July 31st and August 1st. Is this enough to set the top? Probably not. Maybe so. Here's the potential resistance. This could be channel highs before we drop. The decision cycle should be bearish. All right. I think the problem that we're seeing here with the dollar index is it might just do this before we get our next trend. Right. And it seems illogical, right? You'd want to think like the timing, it's got to drop. It's got to drop. But it doesn't have to. The market can do whatever it wants to do. If it's going to stay consolidated for the next 3 months, 4 months, 5 months to finish the year, it can absolutely do that. It's going to drive me crazy if that happens, but I will still acknowledge that it's not go time. All right? So we need to break these levels for this dollar to have the freedom to fall. Otherwise, this is range bound, or this is just nasty indecision right now. If this is indecision, so be it. If this is range bound, so be it. But the big decision is going to come from the break. We have to see that break. That's where the trends kick in. That's where the breakouts and the volatility gets higher. That's where the magic happens. We'll be breaking this yellow box or lower, which, by the way, is going to be somewhere around, if the dollar index gets below 12,229 and closes below 12,229, I'll be looking for a move pretty quickly down to the yearly pivot, which is 12,030. So that's food for thought on the dollar index. It is indecisive right now. There's nothing that's really taking charge here and pushing the dollar lower. It's a lot of indecision that traders are just going to have to deal with for right now. Right? Oil. Here's the wedge, and it's still in it. Okay? In fact, we had a bit of a fake out last week. I mean, you can see that we had a drop below, I thought was a major low. We had traders in here around $53 or $54, broke down toward $50.33, but you can see left, $50 is a round number. Let's keep an eye on this, because this could pull right back up towards this area. This becomes more wedge bound and gives us, again, a 50-50 trade. So oil is in a bit of a toss-up. Lots of volatility to deal with. Be careful on that. That is also why with the indecision on the dollar index, indecision on oil, I'm not really trading the dollar CAD yet. Meanwhile, we have gold and silver just being relentlessly bullish, and I love it, and I'm long on both of them. So I'm going to keep staying long on gold and silver and keep pushing higher and higher and higher. I'm loving this. And take a look at this one on silver. Silver has a nice clean trend line with highs back to 2016. I would say we are open to keep going. I think silver can get towards $20, which is pretty awesome. So I'm holding long since 14. I've had many positions added in here. I've actually added to it at around 1470, 1480. And I'm going to try to get to $20 and hold it from there. Gold, same thing, bought in around 1200. Bitcoin, still in a corrective channel. We're at 11.4 recently with the dollar. It's had a bit more of a play. What's going to happen? Either the break or the channel. So if we break, awesome. Let's go. Let's make some new highs. If we don't, then we're coming back into corrective levels around 8,500 perhaps. Maybe we're building off same lows around 90, maybe roughly 9,000. But we'll keep an eye on that as it develops this week. So one more glance at the strength chart before we wrap up the weekly outlook. Take a look here. Pound just coming off the highs. Yen settling back in. The Swiss getting stronger with that yen. Euros dropping. Dollar steady. We have commodity pairs on the low end of the food chain today. New Zealand dollar, Canadian dollar, and Aussie. So I will watch and see how the pros close today. I'm looking to see opportunities this week. I will join each and every one of you in the trading room this week. That's going to be Tuesday, Wednesday, Thursday. Let's try to make some pips. Hopefully we have our positions righting the ship on some of those drawdowns. I'm looking at euro pound, just 14, 15 weekly candles. That's insane. This is why we traded small, and we're also looking at major time frames. But we'll get it all hammered out. Hopefully Aussie New Zealand will cooperate for us to the upside, and we start pushing up to 106, 107, 108. Be nice to celebrate at 108. So anyway, got a lot of good things in the works, a lot of good positions. At the same time, we got a lot to talk about. So see you all this week. If you have any questions, let me know. Pulver@markettraders.com, and let's have a good week. Talk to you soon. Bye.